I think that we can say in general that no government on the planet is providing enough stimulus and enough support. As massive as it is, even packages like, say, that in the US, in Germany, in Australia, which are something like 15% of GDP, they're going to end up looking inadequate once we see what happens with job markets and GDP and other economic indicators. There's simply no way of fully offsetting the impact of this horrendous virus with fiscal stimulus. You can only ease the pain. Uh, that's the most important point we can say. But what you can do is keep businesses alive. You can keep workers spending despite their lost incomes, and that can help a recovery happen faster than if you were doing nothing at all.
Okay, so if you're of the opinion that really no governments can do enough in the way of stimulus to offset this blow we're having from the coronavirus, I mean, so much of what we hear in terms of people willing to buy into any risk rally is on that premise that governments are doing enough. So do you think markets perhaps are being, let's call it, a bit too complacent on this front?
I think we are due for some consolidation now. If we look at several variables, one, valuations, markets, equities globally are no longer clearly cheap. We typically don't see equity markets trough until purchasing manager indexes like the ISM in the US bottom out. That hasn't happened yet. If we look to debt markets as a guide for where equities will be going, typically you see higher yield spreads in debt markets lead equities, and the spreads right now are looking a bit thin given the extent of the hit that we're seeing. So we expect that there will be some
Sure.
consolidation in global equities. This will not be confined to Asia, but Asia will not be
Right.
immune to this. If you look at correlations of global markets right now, they're extremely high. Everyone's moving in the same direction. So yes, I do think that we've got some vulnerabilities right now.